Good morning, or good evening to you people in the US. It looks like the markets have had a very unpredictable reaction to the unemployment rate that came out yesterday. Came out that more people are in jobs now compared to last month, so you would expect that to have a negative impact on the market, right? But it's gone the opposite direction to what we were kind of thinking. And then after that, we got another event that another sort of like news release or data release, which was let me just zoom in here, the ISM Services PMI. And that definitely may have been the reason that things picked up again after that announcement, which was only I think like an hour and a half later. So initially, yeah, there was a dump just prior to the rate release, right? And then we had this really bizarre reaction to the upside. But as you can see, once that high, there's a really tall wick on that high. Once we came down though, like once we got that wick, we started to get a trend heading back down. So, you know, this was the direction that would have matched up with the unemployment rate coming down. So, because, you know, as we all know, the Federal Reserve want that unemployment rate to go up to try and curb inflation. It's a temporary target or temporary objective of theirs to have more people unemployed to try to reduce demand on markets and on services and goods, right? I mean, the whole reason we have inflation is because the demand is high. But now that's, I don't know, there could be like an opposite correlation going on there at the moment, but I'm sure there are other explanations behind that. Now, we did crack above 17,000, but we have not had any significant action above it just yet. We're still waiting on, you know, how this plays out. Like, are we going to get a rejection by 17, which is still very possible, by the way. Hence the whole title of this video being, we're not out of the woods yet, Goldilocks. But anyway, this whole, all the people setting up shorts through this area expecting, a negative push down off the unemployment rate certainly felt the pain as prices came up. So I guess the whole point here is, don't try to predict the market. Let the market show you what's going to happen. It's better to basically go off information as it presents itself rather than try to predict the future. So just as dangerous as it is trying to predict prices going to 30K, it's also dangerous assuming that the market's going to go down to 10. You know what I mean? So just play things as they come. Zoom the hell out on the chart too. That's another good bit of advice there, is look at the broad picture. Let me just hide some of this as well. The broader picture is, we have this going on, right? Stair-stepping, 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 stair-stepping. You would expect us to, continue the stair-stepping, right? we've just had a whole bunch of stair stepping. Like, it's impossible for us to go up. Like, from here, there's no way, there's no chance, right? Just be careful of that way of thinking as well. You know, just because a trend does this doesn't mean that it's going to keep doing that like forever. You know, things do turn around. Let's look for examples of that. Like right here, look. Down, up, down, up, down, up, down. How come we didn't do this? Why was there no crash? Like, what? Why is that? Why did that happen, you know? This is why it's dangerous to think just because we've come down that we're going to keep going down. That's just the mindset I think a lot of people still have, just because of other markets too, by the way. Look at what happened with the S&P 500. We did a very strange thing. We broke up, or we've been breaking up out of this bear pennant, right? Very unexpected, against the textbook scenario, or a lot of people, I'm sure, were like seeing something like this happening. But you know, this is why it's important. I guess this is why we have stop losses as well, huh? Let me catch up with some of these comments here. Let me just say g'day. What's up, Mr. Dino? Thanks for the like. Great air music. Papa Pal is gonna ruin the party next Tuesday. Quite possibly. You know, a good point on that. I think the Federal Reserve, I think it is in the best interest for them, or for the economy, to remain hawkish. We are nowhere near the target of 2% inflation. Like, you know, yes, we've come down from the 9.1, and we're currently at 7.2, I think it is. But there's still a long ways to go. So they can't sort of take their foot off the pedal, so to speak, and expect, you know, inflation to keep coming down without staying tough on the matter, because we're barely even a third of the way to our target of 2%, or the Fed's target of 2%, from the 9.1 starting point, right? Let me show you. So there's the current peak. Not saying that that's going to be the be-all end-all peak, but that is the peak we're working with in this current decade. So this is the 2020s that we're in now. You know, there's no doubt that the whole COVID pandemic caused a huge shake-up, you know, in many different ways, but especially economically speaking, like the economy, we saw massive rise of inflation as like a fallout to that. And then we've had huge interest rate hikes to try and counteract that and curb that inflation and get it back down. It seems to be having the right effect so far, but we're only, let's get a little measuring stick going on here. We take it from there to there as a measuring stick. We are only about a third of the way down, right, to the target being 2%, this yellow line. So it's even more than that. There's a little bit more work to do. That would get us to 3% if we were working by thirds, right? So it took 12 months of raising rates to get us just this far, to get inflation down to this point, right? It could take another 12 months to see us even just come down to 5%. You know, if that's the sort of trajectory we're working with. But yeah, I think it would be unwise for the Fed to reverse their economic policy right now and like pivot, because you know that they would run the risk of inflation taking back off again, you know, if things get too happy too soon, too quickly. And, you know, that was the case back in the 70s. Interest rates were raised, inflation was put under control. I think they eased off way too soon, and then it just got out of control again, leading into the early 90s, right? So their goal is basically not to see a repeat of that from the 70s. They don't want to see this happen, right? Like a double peak. So yeah, remaining tough. There is a purpose to it. It's painful, of course, economically painful in the short run, but it's necessary to get this inflation under control. Anyway, as we know, the US inflation reports are basically 2 months delayed to where it is right now, to the actual figure of what it would be right now. Our best estimation is by Trueflation, which is their whole purpose is to try and forecast inflation each and every day. So currently their projection of today's figure is 5.8%. That would put us down, let's see, around about here. So let's mark that out on the inflation chart here. Now I know this isn't crypto, what we're talking about here, but it matters. It's definitely correlated, because the crypto market is driven by fiat coming into it, fiat currencies, right? So the real world matters. So that's basically where they see us in 2 reports time, Trueflation, right? So if we project from here to where they're saying we are, that would mean the next couple of CPI reports should be optimistic, right? That's what we should be seeing. Ooh. Let's just go like that. Wrong line. This one. Okay. So that would be great. Now let's see months. So we got November. Now remember, the December report, which is what we had, looks at November. So that's why this is plotted at November. And then our January report looks at December's performance. And then what looks at January's performance, that's the February report. So we might not get, let's see, if we stay on this trajectory, it's actually a lot sharper than this. It's probably more like something like this, I would say. So yeah, it's a similar trajectory there. That's even a bit too far out. There we go. That's March. That's about as accurate as I can get it, for what Trueflation's suggesting is going to be the report by February, right? Pretty great. They're not totally accurate to what the Fed puts out. You see this line down the bottom, this aqua colored line, is the actual government Fed report, or the actual inflation figures, right? And this is the Trueflation's record against that. So you can see they actually like reported higher inflation than what was put out by the government. Then it kind of makes you think, like, do the government put out accurate statistics, like to try and ease the damage that those kind of bad numbers are going to give? Like, I mean, that's a conspiracy, but nonetheless. Anyway, let's get back to cryptocurrency for the moment. And let's see, we've got 5 minutes until the daily close for Bitcoin. Let's move across to that chart. Let's turn the levels back on, the key levels and the price levels. So we are still in the neighborhood of $17,000. We have not been totally rejected by it yet. this first reaction is very reasonable. Like, to have a reaction like that off such a critical level, you can almost expect that, right? And then, some people that saw that coming, like, reaction off a huge level. I'll zoom out in a minute and show you why it's such a huge level, right? But yeah, this is pretty natural reaction to have that kind of bounce backwards. But look, the bulls are still fighting to try and pick this up. Now let's do that zoom out. Let's go to the 4-hour chart and zoom the hell out. So let me just turn off the key levels here because we just want to focus in on price. So there's 17 where we're just wicked up through at the moment. And let's look left. It looks like we hit a very similar point with a wick back on the 20th of December. We fell short of it. We haven't quite hit it yet. But that is a line of resistance up ahead in and of itself, even though, it's kind of just in the middle of nowhere. But yeah, it'll be interesting to see, because there is still a chance that price moves beyond it, right? Perhaps price could do something like this in the coming hours, is move beyond it only just to get people bullish enough to take new long positions before dumping it back down and then retracting that move to trap people, to liquidate the shorts, all that jazz, It is in their interest to do that as market makers. That's how they control the market and continue to control the market, is to take all the chips off the table, basically. Grab that liquidity, keep the liquidity for themselves to keep them as the strong player and retail as the weaker player. Unsophisticated, uncoordinated, unorganized, weaker player. Still a big player in retail, right? Just kind of uncoordinated, unsophisticated player, like whale. Whereas obviously the market makers are a sophisticated whale. They've got a lot of money and they have a strategy and a plan of attack to drive price in the direction of the most liquidity to grab. So that's my take on it. So share your thoughts. Like, what do you think? What do you think of 17K? Do you think we're going to hold it and potentially move higher and find support up on top of it? Or do you think it's going to be too intense of a level of resistance? And do you think we're going to start ranging back down? Now, something to be aware of, like coming up on, I think it's the 9th for you in America, there is something important about DCG, Genesis, and Gemini. There's some kind of like bearish like news event horizon coming up. So people are fearful of that result. So perhaps that's a sell the rumor, buy the news for the bears, right? Like they're selling into the rumor or into the news event of it being bad news. And if we do get bad news, that's the event done and dusted. Like, maybe price settles after that event if it is bad news, right? We'll see what happens. We'll just have to see what happens. Now, by no means am I trying to like impose my will on the market and say that we're going to crack higher, because that's definitely not what I'm trying to say. Let's let the market show us where it's going when it gets, candle closes beyond ranges. So far, all of our candles have closed below 17,000. What's that telling you? We have not yet broken that level, so it's not a time to jump the gun and go long or anything like that. Breakout trading is kind of risky play. You're probably safer looking for shorts at 17K, to be honest. As overall, We're in a bear market still. That hasn't changed. So the macro current of the market is down. If you think of it like a river, the current, we're still downstream, right? We're still, the river is still flowing down. And the bulls obviously are trying to swim against that current and turn the direction of that river. So let's see who else we got in the building here. 30 people so far connected to this stream. Smash up the like button, guys. Hit subscribe if you haven't already, and turn on the notifications so that you know when I go live next. It's usually every day, roughly this time. Try to get on and do the market close for the day. Let's go back to those events as well. But before I do that, let me just let's have a look at these comments. What's up, American Crypto Monster? Coley's in here. What's up, Coley? Buddy Langford. I called it. Good job. Good morning. 223,000 jobs added in the US. As all moments, this specific release shows a recovery from COVID's gig economy. Many factors are involved, but it shows a resilient market still. Yeah, that's a fair point, Jack. That's a fair perspective. What's up, Jack, by the way? I hope you like the thumbnail for the stream. Certain to rustle a few feathers, maybe. It's meant to be totally lighthearted. Don't take it too hard. If you were a bear, if you were bearish and you got stopped out of your shorts, it's no biggie. It happens. Yeah, still bearish for 2023. Fair enough, man. Like a couple of streams ago, how we were talking about a crab market. I think I'm a bit more crabbish, I guess you could say. I think there's more evidence for us chopping sideways until we really see evidence of a reason to turn around, you know? Like, yeah, 17K is holding strong as resistance at the current moment, so I'm not trying to get my hopes up. What else we got here? Frank says the thumbnail's hilarious as usual. Thanks, Frank. I tried. Solana pump right now. Okay, cool. Looks like I'm a bit late to looking at that, but yeah, it's. Look at that. We got a nice, we had a nice EMA cross here. Buy signal, right? Still riding those EMAs on the 5 minute. The 1 minute, bam! What an explosion on Solana. Awesome. Solana's something that Jack, Serrano, and myself have been scalping using the Ishimoku strategy, and it's been great fun learning that strategy and just seeing it, you know, back testing it really, or not so much back testing, but live testing it with real money. So you know, even just down on the 1 minute chart, it can be used and it can be profitable. So yeah, awesome volatility right now. This is beautiful trending conditions. If I just turn off the EMA cross, we've been riding the 200 EMA on the 1 minute chart here. A little bit of a dip below, but that's okay. We got back up on track here and still riding that 200 for Solana. As we all know, there was a lot of damage done to Solana since the fallout of FTX, right? A lot of damage. You know, massive drop down. And this, you know, with a high amount of damage, there is potential for a high amount of recovery off that. We already saw a really fast pump, just like a lot of things felt off that initial bounce, that dead cat bounce of the FTX collapse. Wow, Grade A Music, you're most welcome. Always a pleasure streaming for you guys. That's a very generous tip. Appreciate that, man. Thank you. This little drop, I mean, sorry, it's a big drop. It's not little by any means, but I think, yeah, there is a lot of room for potential growth here. Even if it's just like, you know, even if it's just up to $20 for Solana. Like that's a lot of movement going up. But you know, we all know where it came from. Solana was massive in 2021. It was basically what, $260 all-time high, and you know, we've come down as low as $7.85. That's crazy. That's a big old drawdown. The project has not collapsed. They're still there. Like the devs, you know, as far as I'm aware, they're still there. It's still the same project as it was back up here, fundamentally, right? There's been no changes to the protocol. There's been, you know, the team hasn't rug pulled. Well, I hope they haven't. You know, you'd certainly be hearing about it if that was the case. I think this is naturally, all the alts, just remember, a lot of the alts have come down at least 80%, some more than 95%. So, you know, it's not that out of the blue to see this kind of activity. But yeah, if you think Solana has any kind of future, you know, and I'm not calling for new all-time highs in the next cycle, but if it has any hope, like, you know, even if it just gets back to $40, like this ranging part that we were in before FTX, right? That's a big move going up. Let me just grab a measure. But anyway, all I'm trying to say is, obviously, be careful getting into things that are risky. Like XRP's a risk, Solana's now a risk. It's a bit of a wild card now. You know, before that it was a bit more of a sure thing. Not a sure thing, but it's like people had a lot more confidence in it. You know, buying up these cheap prices. But right now its foundations have been shook, and it'll be interesting to see where we are 12 months from now, to see how this played out. But you know, I'll certainly still be here streaming and talking and looking back on what was, or potentially was, the bear market, you know, if we have bounced by then or we have recovered. But yeah, anyway, I guess the whole point of this stream, the whole point I'm making this stream is reversals do happen at the bottom end of a bear market. I think it's silly to not be open to that possibility. And obviously, I'm not fixed in either direction. I want to make that clear. I'm not saying that we're going to 30K to, like, you know, next week or anything like that. And just as much in the same vein, I'm not convinced we're going to 10K yet either. So yeah, let's just play it one step at a time. That's the better way to play it. Trying to predict something 6 months out is basically a fool's game. You know, it's okay to have a projection and target something, but like I've said in streams before this, trying to play that Nostradamus card and pretend like you know what's going to happen, you're just gonna, you know, if you keep that kind of behavior up, like you're gonna be disappointed at some stage. Yeah. Trading off predictions is not... If you look at what the professionals do, the most successful traders in the world, like the people that trade for institutions, they're not out making predictions. They're out... Well, the way they get up to become professional is they follow a strategy and they execute that strategy time and time again. And they're basically playing their edge, the edge that they have. So, you know, successful traders, it's all about your edge. It's all about, you know, sticking the course even when you do get some losing trades, right? We all know that the sophisticated so-called smart money, they don't always get it right either. I mean, look at the smart money that invested into FTX and lost billions. So, yeah, there's no bulletproof. I mean, maybe there is, But there's no bulletproof, especially not for us in retail. There's no bulletproof method or strategy or forecast or anything that we can look at that's going to tell us exactly what's going to happen. But we all we can do is do our best with what's in front of us. Ghost of Corey Bing Bong. Sol is at a bearish harmonic level for the deep crab, yo. Yeah, fair enough. Bearish. Okay. Honest. What's up, Honest? So we're 10 minutes into the new daily candle. So far, bit of a pullback. Let's see. I want to just quickly look over to the S&P 500. How did the SPY close out? Let's have a quick gander. Let's go to the daily. Oh yes, we did look at this. We saw how we had a solid Friday. I love Fridays, by the way. Fridays are nice and volatile usually. If you go back in the history of the S&P, like, you know, more often than not, you'll see lots of action on a Friday. But look at this Thursday, Friday, pretty big candles there. Friday, big candle there. Big candle there on a Friday. Huge, like, look at the top and bottom of that candle. It's quite tall. The body's short, but a lot of volatility there. I find Wednesdays to be a little bit smaller on average, right? Just from the ones that I look at. The early part of the week, I feel, takes a bit of time to warm up, and then you get, you know, the big moves happening later in the week, like your Wednesday, Thursday, Friday kind of thing. But hey, that's not to say that that is a hard rule, a hard and fast rule to go by. It's just yeah, it's just a trend that I see happening. Yeah, interesting close to the week. Friday, you know, this massive push up out of this pennant. What sentiment does that leave us as crypto traders and, you know, crypto participants going into the weekend where we're left to our own devices, you know? Like, we don't have the influence of the stock market now over the weekend. Like, the influence of the stock market stops here on the close of Friday, right? You know, maybe you can look to the futures market and see if there's any kind of hints, but there's a point where that stops moving too, right? And it did. 8 o'clock my time Saturday morning is when the futures, the US 500 stops. Until picking back up, you know. When does it open up again? Let's have a look. Market is closed. Market opens in 1 day, 22 hours. So it's basically 48 hours from now, or 46 hours from now is when this will start moving again. Now, I think the DXY, it's a similar story. By the way, let's check the DXY's reaction to that as well. It didn't like those impact event, those figures coming out, did it? It pulled right back down off this little, you know, relief rally off the bear trend here. The DXY on this time frame here is in a bear market, really. Like, it's correcting fairly heavy. I would say the bear market has begun for the DXY, but yeah, a little bit of relief. It's got somewhat of a stable floor that it's using right now, so it has kind of plateaued. It kind of looks like inflation, right? On the Trueflation website, because Trueflation has plateaued in the last like 3 or 4 days. Go back here, just look at it real quick. You can see here. I don't know if you can see that too well on the chart on the YouTube stream, but yeah, we've come back down, and instead of, like, you know, ending up further down this way, it's flattened a bit, flattened off. So Interesting. Hopefully it gets going and correcting further and it doesn't start going up. Anyway, yeah, that's pretty much how I see it today and in this moment in time. Remember, if you can remember a few days, like a few days ago, we were talking about this range here. You know, we were really dialed in and focusing on this, and it did play out like both parts of that range got respected until we got that final breakdown, inverse head and shoulders, and then huge pump up. So this range, I'm going to leave it there. I think it's still going to service going forward in case price does start to correct from here. But I think that the important range that we're looking at right now as well, like the broader picture, is this here, this larger rectangle. So 17K being the top, and the bottom of that being 16K. So let's see. This pump here was the last build up. The anticipation for CPI was this. Met resistance, corrected heavy off. Are we going to get a repeat of some kind of CPI, buy the rumor, sell the news, If so, maybe it looks something like this. Like, okay, this was where's the lead up? Okay, let's say we started leading up from here. Like, do we get a repeat? It's not going to be a perfect repeat, but what if we do build up, in a similar fashion? Could we see 19K as the next tag before getting rejected and traveling back down to test 17, That would be a very, that's a perfect world, scenario, right? Where it's just very obvious. Look how this coincides as well. This fractal kind of coincides with a retest of the top of this rising wedge, because remember, we are still in a rising wedge, which is a bearish pattern. But yeah, I don't know, over the next month, we could see a push and maybe get some activity outside of our larger falling wedge, right? But yeah, we are still in this rising wedge. It was looking like we were going to get a bit of a pullback and a breakdown. Let me just delete that. If I zoom out, go to the 4-hour chart, it did start looking like we were going to get a breakdown to, wait, let me get the price levels back up. This part here where we broke under that trend line, it looked like maybe that was the start of the big, move down to say 15.5 and lower, right? Breaking out of that rising wedge. But look, I think if you look at the pattern, if you look at the shape, we're still early in it. That I think it's reasonable to sort of see that this could be possible. Capping the top again before getting rejected and then breaking down. Perhaps that could be on the cards, but yeah, we'll see how that plays out. I'll leave these pennants, or these wedges rather, on the chart, and we're going to see how they play out right beyond the apex. The apex to this one is all the way out in March, late March, and then our big macro falling wedge that goes right out until, I don't know, I have to go to the daily to see that. May? Yeah, 10th of May. So we should get a resolution by then. We should know the result of both pennants well before May, I think. But yeah, let's see. Another thing to be aware of is the potential for a crypto winter type scenario. Sideways, right? Crab market. Very possible. Let's do that. let's do a bit of a forecast on. Let me delete that one. All right, weekly maybe. Let's go weekly chart, and grab a fractal of what might happen. Now let me bend this to my will to make it fit my hypothesis, right? I know that's a popular thing to do. Yeah, that could be something that happens. Let's have a bit of fun with this. That could be something that happens, right? Let's grab an optimistic one to just have fun with this. I don't know. It kind of looks like this drop kind of looks kind of similar, doesn't it? Let's marry that up. Remember, I have to warp it because that's part of the rules. Maybe something like this. Maybe we can. What if I hide this one just so I can get this one looking a bit cleaner? Yeah, maybe we do get a spring, like that so-called Wyckoff accumulation spring, right? Which takes us down to 13. Maybe something like that could happen. Halving is early 2024, Bitcoin halving. That maybe that does something to the price. But wouldn't that be awesome if that happened? So yeah, as you can see, you can pull fractals from all over the place and make it match up to your forecast, to your predictions or your bias, right? Here's another one. Let me hide that one, so we'll lock it and hide it. I'll change the color of that one too. Let's make that bright green because it's like a bullish one. This one's kind of like neutral, so amber. And now, yeah, I guess we could do a fractal that's totally bearish. Let's do that. I mean, what does this look like? Let me turn these off. What does this look like? It could be the beginning of that we can, where we can bend something into it. Maybe we can say that the FTX drop was similar to this. And I'll have to do a bit of bending to get this to work, but that would take us below. I mean, I grabbed that from over there. It is like in the midst of a bear market, so it's not totally crazy, but yeah, grabbing fractals and pulling them to fit your bias is quite easy to do. You got your bearish one, you got your bullish one, and you got your... I'm feeling like something like the yellow is a little bit more... that's what we're getting if I'm to try and predict what's happening. But I'm not closed to either any of the three, right? Up, down, or sideways is always possible at any point in the market. But yeah, there was a good video shared in the community, in our community here, by a YouTuber called Blockchain Backer. He's got a very interesting perspective that no one has really talked about, looking at the market and just moments in history that looked similar to the way this is performing. Let me put it up in the chat. That's a link to it right there. Check it out. It's a great video. It just adds a different perspective that we haven't really heard of about. I think he does a lot of like analysis on the inverse of the charts. So if I go like that and zoom out and look at the all-time high, this is the all-time high, 69K down here. But yeah, if you watch that video by Blockchain Backer, you'll see what he's trying to suggest as correlation to the inverse all-time high scenario. He does a few different comparisons, and it's pretty interesting. You know, if the next like 12 to 24 months, like that's what this yellow projection is calling for. Maybe that's possible. Like if we don't get out of this macroeconomic situation that we're in, with, you know, a looming recession, inflation being high, interest rates being high, you know, maybe that is quite possible. Like we may do that, and you kind of have to prepare for that. Now, there's a difference between preparing for something and expecting something. You got to be careful when you expect things, because, you know, expectation quite often leads to disappointment. If you get too fixed in one direction or one hypothesis or one theory, you know, disappointment's a factor. So things can change. But yeah, that's pretty much all I wanted to talk about, as far as TA goes. Now, one other thing I'll cover. Let me just open up the events list here. So it's a bit jam-packed. I've got to go down to a lower time frame to see it. But let me turn on my TA as well and my levels. Levels. Okay. Let's turn these back down. Text size a little high. What formatting I had for these, but anyway, something like that. Okay, so we had the job openings. We had the FOMC meeting minutes, which apparently were, you know, they were still pushing that hawkish sentiment, saying that there's still work to be done, and that we don't have any plans of changing that yet. So that was, you know, big dump. Then we had the non-farm employment change, which had a bit of a non-impact, I guess. We sort of still chopped sideways. Unemployment, it looks like we sold off into that. Like maybe we were expecting things to be negative. You know, maybe that was a bit of a sell the rumor, buy the news kind of thing. Like the inverse instruction of what you get in a bull market, where you buy the rumor, sell the news, right? So like in a bear market, you sell the rumor and buy the news. So the rumor was true, like the unemployment rate did increase. The unemployment rate did decrease. So maybe that's the explanation for how this played out. ISM services PMI, I feel like that was just like an extra booster to what reaction we were already kind of on, the trajectory off the unemployment rate coming out. But yeah, let's see what the future holds. Like, what do we got coming up? Zoom out a little. Okay, so let me zoom to a point where all the vertical lines, and we'll turn these vertical grid lines up a bit so that we can sort of see the breaks in the days. Okay, so we've just had that. We're partway through. Let me turn this to New York time zone as well, just so it makes sense for you guys in the US, because I think you guys are the majority of the audience. But it makes sense because the Fed, you know, it's American. These are American-related events. But yeah, we've got basically 3 whole days to get through, and then Tuesday, the 10th of January in the morning, we have Jerome Powell making a statement in the lead up to CPI, which is on the 12th, Thursday the 12th. So the rest of we've got the weekend to get through, which is this area. This will be the weekend. And then we got a big week coming up. So Monday, Tuesday, Wednesday, Thursday. Big week coming up, and then Friday should be interesting. We'll see what happens. But yeah, a big Thursday, Friday of volatility, I think, is on the cards here. But yeah, weekend, going into the weekend, traditionally with crypto, as we all know, it sort of chops. It loses volume until things start to pick back up on Monday, and then we get, you know, whatever's happening on Monday. Yeah, that's yeah. Let's keep our eyes peeled for these. This being the big one, CPI data release. Anyway, let's just watch a bit of price action for a moment. Maybe I'll turn those vertical grid lines down a little. Down on the 5-minute chart, the daily close was right there. Let's mark that. Make it like gray. Yeah, it was a pretty volatile day yesterday, huh? Where was the start of yesterday? Here. So basically here is where we started the Friday candle, or sorry, the Thursday candle, and it was just a big old dump. Actually, sorry, that's all of yesterday. Yesterday's the 24 hours of action, right? So a nice move. Just measure that to check that. Yeah, 1 day. So what was the prior day's action? Probably roughly there. Yeah, chopping sideways, that's right. Not a whole lot of activity compared to what we just seen. I mean, it was when you zoom in, but yeah. All right. I'm rambling. Let me, we'll go zoom back in. Bitcoin hasn't really gone anywhere just yet. We're only half an hour into the day, but typical. Things off to a slow start. Go to the 15-minute chart. Catch up on some of these comments. So Dan's asking about PaxG and Gala. Let's have a quick look at Gala. I'm not sure about PaxG, but I'll check. Is Gala like on trend or something, or Gala? Okay, down 1%. Wow. Gala had a big day, or a big night. See, this is Brisbane time zone. All right. There's midnight for me. Yeah, wow. Beautiful rally. 31.5% up. Damn. Obviously, we got our daily just starting. But yeah, it did do a bit of a pullback at 9 o'clock for me. So in the final hour of the daily candle, there was this, you know, whole bunch of profit taking on Gala. So just be very careful with Gala, guys. Use your stop losses. But still, hey, it's an uptrend. Look at the 1 minute chart. You can see we're above the 200. You know, that pullback that I mentioned, the 9 o'clock pullback there, the last hour of the day, it has created a red Ishimoku cloud, and it's, you know, we've capped in a lower high. But remember, it is the lows that define an uptrend. So technically, we're still higher than the previous like zigzag pivot there. However you want to draw out this zigzagging, right? But yeah, it hasn't quite broken structure yet. Haven't changed direction just yet. How did we go today for viewers? I think we got a peak of 31 people. That's good. Nice day. I think yesterday was a bit slow. I think we had like about 20, something like that. But yeah, it's a sign of the times. We're in a bear market. We're looking at a potential crypto winter, so to speak. So it's no surprise that you know, the general population, the general public, aren't looking at crypto right now. They're very scared of it. They wouldn't touch it with a 10-foot pole, basically. There is no excitement in crypto right now, obviously. Let me turn off all this and go to the weekly chart for Bitcoin. You can see that's the case. You know, it's very flat, especially since our FTX drop. Look how flat we are. Look how flat this is. This is a daily chart. You know, the general public come in when things are exciting and things are moving rapidly. Otherwise, when things are flat, people go do something else, you know? People focus on other things that they're interested in, and you can't blame them for that. I mean, it's normal. I sure as hell did that. Back when I was a beginner with crypto, I got in here, faced a massive bear market. It basically sobered me up from the euphoria. And then I turned my back, especially after this capitulation here. I'm like, nah, I'm not interested. And yeah, didn't take advantage of the crypto winter, of the flat, cheap market. Came in late to this rally here. Came in really late. Still made money off it, but I was late to the party. Delete all this. Yeah, so came in late, probably like around here, so this area. Made a bit of money, picking up the crumbs of the bull, like this bull run here. I wouldn't call it a bull market. It was just a bull run, or a bull trend. And then, yeah, things started getting nasty again. So that's why I was like, nah, it's more of the same. I'm out, I'm not. Because at that point, I could only take long positions, being a spot trader at the time, right? Just trading spot. You can't really short. You can sell, you can take your profits and just stay in cash while things crash down. COVID dip, I was not really looking at the price of Bitcoin. I think I looked at it. I'm like, oh damn, that's a huge sell-off. That's nasty as hell. We're back down to the depths of when I wasn't interested. Back down to those levels again. Is that the best we can do? Push to 14,000 and then crash down again? Like that was my bleak outlook. I mean, I saw this happening. Let's change this to white just so it's like neutral. I saw like this, just more chopping sideways, crypto, just not being exciting anymore, just going flat. Probably flatter than this, right? Well, maybe more like that. That's what I was sort of thinking. But surprise, surprise, I started looking at it when we got above, or we were approaching this high. I was like, oh shit, things are picking up. And then people really started paying attention when we broke 20. That was a big deal, breaking that psychologically, right? So let's do an interesting fractal. I mean, fractals are fractals, right? Take them with a grain of salt. Okay, all-time high to the point where price broke out of its all-time high. It took 3 years, basically. 18, 19, and 20. It took almost 3 whole years, or basically 3 whole years. All right, let's start bending it to our will again. So we'll tack it up there, and then we're gonna say that this was the bear market. Remember, we have to match it up. Maybe we get something like this. Let's see. Okay, let me just restart that. If we're to keep this time accurate, right? So that's the time span so the all-time high is the peak on the left there of the white. So if we match that up to the peak that we do have now, and we just want to hold it to the same time frame, we don't want to adjust the time frame. We just want to adjust the action to the market. So trying to keep the same time frame, but look, that somewhat lines up, right? Imagine if we did something like that. What would that mean for this year? So this is this year. 2023 lives inside these two lines. 2023. What happens if that happens? What if we do get up to here as like a bear market rally, which is what happened during this bear market back here, right? I'll be right back. Where was I? All right. So what price is that? 55k or 50? Just above 54. What if that happened? That's my point is that if we repeat ourselves like this bear market, where we had a bear market relief rally, but this is still all classed as bear market because it's a lower high, right? That's all still bear market. We only went bull market when we got above 14, I would say. That's the way I interpret it. So that's when the bull market started, right here, basically. 14k. So, yeah, I mean, that's possible. We could get a really nice rally. That rally might not even go that high. It might even just go to like 30k even. Even that would be cool. Maybe it goes to here and then we get a correction, as a macro, like the next macro lower high, But yeah, that's wishful thinking, I know. It's still fun to play around with that kind of forecast. It gets everyone excited, I know. All right, I think I'm going to wrap it up there, guys. Once again, I do appreciate you guys checking out the stream. Thanks for stopping by and showing your support. Yeah, have yourselves a good evening and a good day wherever you may be, and trade safe. And I'll catch you in the next stream. Bye.